What's up, everybody? Eric here, Mr. Fired Up Wealth. I have a special guest. I'm excited about this. I have a special guest from the community. His name is Matt, and he's been with us for a while, and he's studied this company more than anybody else. And so I wanted to bring him on the channel. Matt knows a lot about this company, Dutch Brothers. We're going to do a deep dive today. Matt, how are you doing? Welcome to the channel.
Hi, Eric. Thank you for having me. It's a pleasure to be here and looking forward to talking about Dutch Bros. As you say, I've done quite a bit of research into this, so hopefully you'll enjoy hearing what I have to say.
Absolutely. Just for the community, just a quick background, whatever you're willing to share with us about
Sure.
you and when you joined Fired Up Wealth.
Yeah, so I joined Fired Up Wealth last August time. Been investing since 2020, as I feel like a lot of people around my age got into the market. Was looking to get into it for a while, and then having that time at home, started to read up about it, started to find that there was an interest growing, but also it was, as the stock market was rallying after the 2020 March slump, it seemed like a good time to get into it. Not been deterred by the year-to-date bearishness.
Yeah,
I think it's all going to come back. And then I joined Fired Up Wealth August of last year, where I think you know the story where I stumbled across a couple of your videos on YouTube, and I think the last like 2 or 3 you had uploaded are all companies that I was either interested in or had in my portfolio, like Etsy and AMD. So
yeah, absolutely. Yeah, what's cool about it is, Matt joined the platinum, tier, learned a lot from the masterclass, from the community. And now, I feel more than, confident and comfortable bringing him on the channel and helping us break down a company like Dutch Brothers. So what's interesting about Dutch Brothers is it appeals to a younger demographic. I'm sure we'll get to that more in the video. I think 25 and under, most the clientele is. So, that makes, I'm a little bit older than that, so I might be out of touch with some of that. It makes sense to bring someone younger to kind of help explain the company and what the opportunity might be. And the stock recently has been crushed. So let's take a look at it. Let's dive into it and see. I'm going to do a screen share here. And what I want to do is I'm going to break down just a couple of things, and then I'm going to kind of pass it over to you and let you do some presentation. I think you have some slides you want to share with us as well. So can Dutch Brothers bounce back? This is a Motley Fool article. And the stock was hit pretty hard. In fact, it sank as much as 41% and settled with a 26% loss for the day after its first quarter earnings report. So what happened? Basically, it's going to talk about this, and I'm sure you'll talk more about it, so I won't spend a lot of time, Matt. But dairy prices rose 25%, and so they had a little bit of a miss. If I look at the earnings, they didn't seem that bad. It missed by 7 cents, so EPS was -10. Of course, anything that's not profitable in this market, it gets hammered. Plus, this was a new listing, new public company last year. And so these are just kind of out of favor. The market wants to erase these from the history books. But 30% just on this news, and the revenue actually beat 54% year over year, beat by 6.6 million. So pretty good numbers there overall. If you look at the price to sales on this, it's trading right now, I think, at 2.33, according to Guru Focus. So, of course, PE ratio is more popular, but you're talking about 50% growth in that revenue. This might be an opportunity. The max on it was almost an 8. The median, the median was 4.67, and it's trading closer to 2. Maybe it's bounced a little bit off that, right? Since then. So it might be a little bit higher, but it's 2 or 3 on the price of sales, depending on what price you get it at. And kind of looking at it, this was their earnings release, and I won't go through a lot of this in detail, but some impressive numbers on here. And what I'll do is I'll have Matt go through it. And if we miss anything, we can come back to this. But this is a really nice slide deck that you can get on their investor relations page, and it helps break down the company. But that total revenue is 152 million for the quarter, 54% growth year over year. Company operated shop sales, 67.1% growth year over year. But of course, they had that net loss, 16.3 million. And operated gross profit was actually 16.6 million. The company operated shop contribution, 23.8 million. So pretty interesting stuff there. You can see compounding annual growth rate. Matt's probably going to dive into that more. I'm going to stop sharing my screen. That's just kind of a quick crash course, I guess, of the company, just for a viewer that's just coming on. And what we're going to do is go a little bit deeper on that. So Matt, if you want to go ahead and share your screen, I can hand the mic over to you and let you present for a little while here.
Perfect. So
Dutch Brothers, I think out of Oregon, is that correct?
That's right. So Dutch Bros Coffee. out of Oregon, and it's growing quite rapidly across the west coast of America. So, just to start off, I thought I would give a bit of a snapshot into why I was attracted to Bros to begin with. What about the company made me think that this was a long-term investment and not just one of these flash in the pan IPOs that we've seen that kind of boom as they come onto the market and then really fade away, and why this is going to be like a really long-term prospect. So from the top there, growth. What first attracted me to Dutch Bros was I was looking at their numbers just before, just before the new year started, December time, and they were projecting 122 new stores this year. So they were going up from 503 with 122 new stores. So that's quite a large growth and quite a large jump in numbers. The revenue was growing each year, and they had ambitious targets for the future. So it wasn't just like throwing out that number for the next year. They're expecting 4,000 stores nationwide.
And just interrupt there. I mean, just
Yeah.
to give perspective to the viewer, this started trading September 17th, it looks like 2021, and it was at $43.55. Now, of course, these new listings and IPOs, they get hammered. And, a lot of stuff came to the markets expensive already from venture capital, what have you. Everybody gets their hand in the cookie jar. All the underwriters, all the institutional investors get it before retail. But I mean, this is going back to even today, right now, it's trading around $26, $27. That's a $20, almost a $20 discount to what it opened at to retail. So just keep that in mind. But yeah, that's a good background, Matt. I wanted to, make it interactive and make sure I bring that up before I forget.
Yeah, absolutely. So. And jump in at any time. We've got the management of the company as well. So Travis Boersma, it was the founder of Dutch Bros, and he started it about 30 years ago as a little cart selling coffee in Oregon, and it's grown to what it is now. And he still sits on the board, and he's still involved in the company. So he's someone who's there from the ground all the way up. And the board he's built around him, like the CEO and all the board members and directors, they've all got this background in like Stumptown Coffee and different like retail, like coffee retail and coffee restaurants, coffee restaurants, but like Starbucks and things like that. So they've got the experience to bring with them to make Dutch Bros successful. And the other thing as well is not just coffee. So I included just a couple of pictures on the bottom there. Hot coffee doesn't even account for their like biggest chunk of sales. We've got all these like energy drinks. They're all bright and colorful, and that's what's selling as well. So hot coffee is only a section of their product portfolio of what they're selling. And Blue Rebel, you can see, is 24% of their sales. That energy drink is what a lot of people are saying is how Dutch Bros are building their moat of this energy drink that is very popular with the younger generations. And just below there, you can see with the age breakdown, over 50% of customers are between the age of 16 to 25. So you can see where that market is, what they're targeting, that younger generation who might want coffee, or they might want energy drinks or different sodas, and Dutch Bros is offering this.
So I assume the Blue Rebel, if you had one of those, I'm guessing it's like that green one.
Yeah.
The Dutch Bros Rebel, only it's blue, right?
Bright
blue. Yeah.
Yeah, and they've got a range of these Rebel drinks that are different. They're basically just energy drinks, and their sales are becoming increasingly popular with younger generations, and so Dutch Bros is poised to capitalize on that.
And do you have these where you're located?
No, so I'm in New York City, and we don't have any Dutch Bros on the East Coast, and that's something that I actually pick up on a little bit later in the slides, because they're very West Coast at the moment, but I think they're aiming to change that.
Sure.
And my final point of just what attracted me to them is the culture. As I started looking into this company, I started reading the balance sheets, and things seemed healthy and it seemed like it was growing. But when you start looking online about Dutch Bros, people are fanatical about it. And it's got this cult around it that this brand loyalty that they're building that is similar to some of these other huge brands. And I don't want to compare them to anything else, but you get that sense that something is growing here, that people are going to stick with Dutch Bros. I thought I'd move on from what attracted me initially to the company to how they're getting on now. So you just did that brief overview of their latest earnings. They've opened 34 new shops in quarter one, and the revenue's up 54%. So year over year revenue, 54%. That's good growth. And I just included here from the balance sheet, you can see the numbers jumping up, and you can see that this company is taking more money in and increasing their top line with each quarter, you know. And when we're looking for growth, what's that number one metric we want to look at? Revenue growth, and this is growing.
Yeah. And one thing, like being an old Starbucks investor, the thing that will crush you is the same store sales. You know, same store sales start dipping or whatever. That's something that with restaurants, it's really, you know, looked at, scrutinized. So that's something to pay attention to as well. I remember that from being a Starbucks investor for many years. It was like kind of like how Disney Plus will, you know, gyrate and fluctuate off a subscriber base. It's very similar with that same store, you know, sales. They want that growth within the same store sales. They don't want oversaturation, too many stores. They want to see the stores that they have continuing to grow, if that makes sense. That's important. So
absolutely. And this is something that Dutch Bros do report on. So before we move on to that, they're increasing their development. So what they had previously guided was that this year they'd have 122 shops. And as you saw on the first slide, I was saying that that's what caught my eye. From about 500, add another 122 shops, you're looking at an over 20% store growth. And they've increased that to 130. And on the last quarterly earning, quarter one, they said they will be aiming to stick to that 130 shops. Now, doing the math on that, if they're aiming to do 4,000 shops in total, you'd expect that Dutch Bros will be doing a shop every 3 days, a new opening. Now, in quarter one, they did 34 stores, which is about one every 3 days. And they're aiming to do another 30 in quarter two, which is one every 3 days. If they do 130 shop openings through 2022, that's one every 3 days. Now, if they can increase that, they could get to 4,000 stores in 3 years. If 2023, they do one every 2 days. 2024, they do one every day. Now, that might be an ambitious target, but they want to get 4,000 shops across the country. That's a way they could do it.
Yep. And the thing about growth is you want as an investor, we also don't want it to grow too fast. I can remember companies like Papa John's growing too quickly and oversaturating. You know, you really want that slow and steady kind of grind. And another one's famous Dave's Barbecue, which people might not know, but that one grew too fast and they ran into problems. They couldn't, you know, make the finances work with that. With the franchise model, it helps a lot because you're not bearing all the risk and all the load, right? So you can see on your screen, the franchise stores is 267 and then the company is 271. So that's a good almost 50-50 blend there, which I think is important to note.
So in a previous, I think it was their annual report, they did say that they were looking now to have more company operated rather than franchise stores, because the thing that one of the philosophies of Dutch Bros is they want to keep that culture going. They want to look after their employees. They want to grow people. And their philosophy is the more company operated stores they own and run, the more they can look after the people working for them. So it'll be interesting going forward to see if they stick to that as they're trying to grow to that 4,000 shop number, if they're going to continue to run on company operated or open up more franchises. From what I know, to open up a franchise to Dutch Bros is quite difficult. And at the moment, a lot of the franchise stores are from previous store managers that have come up through the Dutch Bros ranks, and then they give them that opportunity to franchise their own shop.
Yep, that makes sense. Yeah, the market cap on this one is about 4.4 billion, and it got down to, it looks like $25.11 on May 12th. Does that sound accurate to you? It might have been a
Yeah,
little lower intraday because that's this off of Google, and I think it might not show the intraday. It might just show the the daily close. So it might have gotten below 25 intraday, I believe.
I think it did, and I believe in the after hours it had dipped further than that on the sell-off of the news of the earnings. One of the interesting points that I was going to raise as well is as they're opening new shops across the country, they're starting to spread out further east. So where they had a lot of shops along Oregon, California, they're moving out and they've got their furthest east stores now in Oklahoma and Tennessee. It'll be really interesting to see how they plan to come to the East Coast, because I think that will be a bit of a different game for them. They're focusing at the moment on a lot of drive-through coffee, and it seems to be running on that business model of these rural areas where you're driving around wherever you're going, like whether it's to work or whatever. A lot of the East Coast cities are walk-in cities, like New York City. You're not going to be driving out to a Dutch Bros.
Right.
So I wonder how, if they're looking to penetrate the East Coast, are they going to have like walk-up shop fronts where you walk up, grab your coffee and walk away, or how they're going to do that? But I mean, this is a very populated area of the country around the Northeast. I'm sure they're already thinking about ways they could get their brand in this area of the country. And I like the fact that they're doing this slowly and surely as they spread from west to east. And I hope to see like just a continual movement across the country. You raise a good point about not wanting to hyper inflate your shop numbers. Well, perhaps if we see like a few at a time slowly moving across, then they can manage that and control that.
Did you run into any research at all how much it costs, like for the company to start, not a franchise, but a company owned? Is it, I mean, it's going to vary depending where it's at, but do you have a ballpark on that?
I do. And I don't want to quote a number. It's somewhere in my notes, but what they're changing their lease structure as well. So I know, and there's an article on the Motley Fool about this actually, where they're reporting that Dutch Bros is aiming to change their leases so they'll own the property at the end of the lease in a way that they would then, it's going to affect the bottom line of their earnings in the sense that it costs more to begin with. But for long-term investors, this is good news, because once they pay off their lease, that's theirs then. And that's their store, their property, and they won't have to continue paying the same rents. So I know if you look at the balance sheets for the latest earnings, these lease lines have popped up with expenditure on leases that weren't there before. And part of this is they're spending out more on those leases and where they're operating. It's costing a little bit more now, but long term, I see it as a good thing.
Yep, that's good. Makes sense.
Mm.
I did notice that franchise new openings, it has 0 there, which is interesting for 2022.
And this is what I was talking about before. For the first 3 months, they've not opened any. Mm-hmm. In the first 3 months of 2021, there was 3. That company philosophy of moving away from the franchise stores for company operated stores, they seem to be running with, and whether they stick with that or not, we'll see how that plays out.
Sounds good. Yeah. Next slide. Definitely appreciate it. That's really good stuff. Thank you, Matt.
Cool. Thank you very much. So the loyalty app, we've got here that during Q1, the number of customers enrolled in the loyalty program increased by 250,000. So you've got 3.7 million members on the loyalty app. Now, on the Discord, this is probably something you remember I researched, not directly linked with Bros before, but just how these loyalty apps affect companies for the positive, and how having a good loyalty app can create so much more brand loyalty because people repeat their purchases, and so many companies work on these apps now. Dutch Bros employed someone new, not in Q1, but the quarter before, to head a tech division. And this is what got me looking into it, because I was like, why have you got someone in a coffee shop who's working on tech? And this is why they're focusing on these apps to get people recurring revenue, to increase their same store growth, to get customers to return. Mm-hmm. And I've got a quote here from the CEO from the earnings transcript, because And I'll just try and paraphrase this: of they understand their customers and how they can increase custom through their rewards program. So as of March 31st, they're 3.7 million users, which is an increase from the previous quarter by 250,000. In that first quarter alone, we added more than a quarter of a million, 4,000 active members per shop, and they're driving 61% Dutch Rewards transaction penetration.
Yeah.
So they're constantly trying to find ways to give people rewards, make Dutch Bros a valuable company, to be reward their customers to get them to keep coming back.
Yeah, it's really good. I mean, even McDonald's has been using an app, something like this, and it seems to be working, especially to give people deals like coupons, because old school people would cut coupons, and I'm sure somebody still does it out, but if their target demographic is 25 and under, they're not cutting coupons. So they all have phones, and they're all like looking for an app where maybe they can get $1 off or whatever, and they get loyalty rewards and things like that. It's a huge deal, and it's kind of that addictive personality with just our society too. Like, we want to be connected to our phones, and you get like little rewards, little badges. Even like our Discord community, you get XP for contributing, right? And you get different roles and rewards. I mean, it's just it makes it more fun and engaging, and this is important. And I think they understand that's what the younger audiences connect to, and it makes a lot of sense to be putting some money into building this out.
Oh yeah, 100%. And I think everyone is kind of aware now that this happens, and this is part of digital advertising, that you get these dopamine hits from your phone, and it makes you feel good that you're being rewarded for something. And we all know it happens, but just like any form of advertising and marketing, it kind of just seeps into the mainstream and becomes part of the fabric of a business. So those that can utilize it will do very well. And Dutch Bros seem to be making those moves to utilize it for their company, hiring someone to lead this. They're building their customers using it and maintaining or increasing the active membership.
Well, speaking of marketing, this video is sponsored by The Motley Fool, and you can visit motleyfool.com/firedupwealth to see the top 10 best stocks to buy now. So with that, back to you, Matt.
Thank you very much. That unscripted
I even botched
perfect.
the delivery, but it's okay. We're just going to keep rolling. It's all good.
So I've my next slide was about labor strains, and I just noticed that I repeated a line from the last one. So just ignore this bit at the top about the loyalty program. One of the things that I thought was really interesting about Dutch Bros when I first started reading into it was I was like going through the balance sheets, I was going through the earnings, I was going through through different calls. And I was listening to the CEO on a webcast, and he was talking about how they'd gone a year without a single store manager turnover. The shop management was at zero turnover. They'd managed to maintain shop managers throughout. And I thought, this is incredible. Like, you're growing hundreds of these shops and you keep growing them. You're managing to maintain management. Like, people aren't necessarily moving on. Maybe they're moving to other stores, but they're keeping the people they employ. So people must enjoy working for Dutch Bros. And here, just from the latest transcript, we've got like everyone's experienced labor scheduling disruption, especially within those first few weeks with the Omicron variant of COVID. But Dutch Bros remains fully staffed and effectively experienced zero disruptions to shops in February and March. For the quarter, COVID-related staffing constraints only affected 0.75% of company-operated shop days. So Dutch Bros seems to be doing something very, very well in its labor. They seem to be keeping people happy. They seem to be keeping people with the company, and they seem to be effectively staffing all of their shops, even throughout these hard times, which fills me with confidence, because union talk has been going around a lot with its competitors. We've been hearing article after article about unions with Starbucks, and it fills me with confidence that Dutch Bros isn't going to have these same problems when they seem to be handling things with their staffing so well and so effectively.
Yeah.
And I think the two there is a link between the two. You've got happy staff and you've got staff that are working through and able to work through. If this was a company being forceful or making people do things they weren't comfortable with, we wouldn't see that low management turnover. So we can see this and we know it's backed up by happy employees. So something's working well. The cogs are all turning smoothly.
Yeah. And that's something that I remember with Domino's Pizza. That was a huge accumulator over the last, 10, 15 years, whatever. And if, actually know somebody that owns a Domino's franchise,
Yep.
and they take care of their people. It's got a good work culture, and people want to stay with them, and that's a big deal, because it can be a cutthroat type industry. I actually worked in restaurant. So my background, actually, my first job out of college, it was 9/11, and I had experience from college. I managed a Perkins restaurant. I was a bartender. I worked several different server jobs, fast food. I actually started working waiting tables when I was 11 years old, if you can believe that. So
Wow.
yeah. And so I was in restaurant really all through high school. I worked part-time at a Hardee's, which I think you have Roy Rogers, maybe on the East Coast. You might be familiar with Hardee's as well. And then, when I got out of college, 9/11 happened. The job market was pretty tough.
Yeah.
And the only thing I could really get was in restaurants. So Famous Dave's Barbecue was actually the very first job as a assistant manager so I wasn't the general manager, but I was one of the store managers, and it paid really well, but it just wasn't for me. It was the hours and everything wasn't for me, but that can be a cutthroat industry, and it's really hard to keep people happy and employees happy. And so when you have a culture like this where people want to be there, it does matter, because as an investor, it's a big difference. But those little things add up to pennies over time. And the hard part is keeping that culture. So it's something to kind of keep a pulse on all the time. But the ones that are successful in restaurants, especially in franchises, they have that really good corporate culture, and they take care of their franchisees and their employees alike. So that's good to hear, and I think a positive for potential investors. So
absolutely. And when we talked before about why they were looking to be more company operated instead of franchisees, this is one of the things that fills me with confidence about them being more company operated stores, because they're showing that they can effectively look after their staff and keep people happy. So at this point, I'm confident that moving forward, as they grow more company operated stores, they're going to continue to build this positive working culture that they've got.
So you might cover this later, but the first thing, if I'm thinking about investing, I might say, this is great, but why don't I just buy Starbucks? They pay me a dividend. I know that they're not going anywhere. How does Dutch Brothers compete with a behemoth like Starbucks? And there's so much other competition too. There's Caribou Coffee. There's a bunch of these. So what would you say to that?
That's a very good question. It's something that I looked into, and I was looking at Dutch Bros and I was comparing them to the other big coffee sellers. Dutch Bros is currently the third biggest in the United States, and you got Starbucks at number one and Dunkin' Donuts at number two. Part of it is the growth. Part of it is that Bros looks to be coming in and growing more rapidly than what Starbucks is going to offer. You can look at Starbucks' last few quarters. Their earnings have been, off the top of my head, I think they've missed on 3 of the last 4 quarters on earnings. It's one of these companies is it going to continue to grow? Yes, I think it is. They're going to continue, and Starbucks is turning its attention away to other countries outside the US, whereas Bros is now looking to take over as that dominant brand in the States. I think they're poised to take over that market share from other companies, and they're doing that by appealing to that younger generation. And I think Starbucks grew as millennials grew up with their coffee and wanting that coffee. And now Dutch Bros is offering things like their Rebel drinks, which, as I said before, some argue that is the moat, that they've got these energy drink beverages that appeal to the younger generations. They're going to come up with this new brand loyalty somewhere else. I think turning attention away from Starbucks to Dunkin' Donuts, I believe their store count has dropped as they closed shops throughout the pandemic as well. So you got a company like Dutch Bros that's building new shops, whilst their competition's either stagnant or dropping shops down. So we've got a real strong entry into the coffee market. And you're right, there is competition, and there's competition on the West Coast as well with Peet's Coffee, which is a West Coast brand.
Yep.
But I think you're looking at a company here. Starbucks has been shaken by unionizations. They've now got their former CEO back as a temporary in command to try and sort things out. I think one of the first things that he announced was he was stopping share buybacks, which is something that Starbucks have been doing for quite a while, which as an investor, if you're investing in a company like Starbucks, these are part of the things that make that company valuable. You're not going to see the same explosion in a share price from growth. So it's going to be dividends and share buybacks that help your share value increase.
Mm-hmm.
So if those share buybacks go away, it's almost like removing a dividend. Like it's just another spanner in the works that could slow down your investment.
Yeah. So really good points here. I've got a few. So I think Starbucks, if you're looking at growth, their growth is going to be international, especially in China.
Yeah.
That's going to be and they've got that establishment there. You know, they've already got shops. Yep. And that could be big. That was why I got into Starbucks, because I saw that international expansion, but it took too long, and I made money on it, but I got out. I used some of the proceeds to buy the house that I'm sitting in. So thank you, Starbucks. So what I would say is, as a rebuttal to that, and yep. I'll help you out with this. As a rebuttal is like, okay, you've got these energy drinks. Well, what stops everybody else from doing that? Like Peet's Coffee could start doing energy drinks. So could Starbucks. Why not Dunkin' Donuts? So it really has to come down to just like anything, like, you know, Nike, you know, there's a lot of people that make, you know, athletic clothing and shoes too. And so it has to have some sort of brand. The fact that they have 3.7 million members, you know, to me, maybe it's more of the younger generation. It's kind of like the hip thing, hips, you know, it's like a hipster type place. Like it's cooler than Starbucks. You know, like the old dudes like me go to Starbucks. The young cool people go to you know, Dutch Bros. You know, that's probably a better bullish, you know, argument, I would think, is that it's just, and you did allude to it for sure, but to kind of reiterate that too, and to kind of stack onto that, I think it really has to come down to that brand loyalty, and that's where that loyalty program is going to be huge. Not that Starbucks doesn't have one too, but you think of like the decor of a Starbucks, and then, you know, we almost need to show some pictures. Like, here's what the inside of a Starbucks looks like. You know, your parents would think this is really good. And here's what a Dutch, you know, Brothers looks like. It's a little bit more modern, or what, you know, whatever. But that's what you're really going for, is just a different brand, a different target audience, right? I think that's
that's right. And I think I mentioned it in another slide as well. I said I didn't want to compare it to any other companies, but a brand can be a moat. Yeah. And I think famously Coca-Cola is one of those companies where their name recognition of the brand is its moat. And again, I said I didn't want to compare it to another company, go for Coca-Cola.
If you're watching this right now, sorry to interrupt, Matt. Drop a comment below. Do you think that this has a moat? Do you think it doesn't have a moat? Love to hear some comments. Let's start a conversation. Drop some comments below, because we're just giving you some opinions, guys. At the end of the day, we're not financial advisors. We can't tell you what to buy. I don't even own shares of this, right? I just think it's really interesting. And I think it might be an opportunity, especially at these price levels. So let's talk about it as a community. We've already done it in Discord. You know, let's do it on YouTube here. So drop some comments, and Matt and I will definitely interact with you, and we'll try to answer every single comment. So yeah, good stuff. I appreciate it.
Yeah, absolutely. And I'm always open to more opinions, and like, if anybody's got other insights into this company, then by all means, I'd love to hear them, because I think even hearing like those opposing opinions can help us build either our own conviction or just identifies weaknesses that we might not have seen. So it's always great to hear
SWOT analysis, like, right?
Exactly. Yeah. So here's some of the clouds forming on the horizon, just from and what affected the stock price. So Dutch Bros revised their full year for 2022 outlook, and this is just a snapshot from those earnings slides. Now, they're still aiming to get 30 stores in the next quarter, but this next line on their outlook is what was a big one. Their same shop sales growth is going to be flat to slightly negative. Now, in the next slide, I talk about some of the reasons why and how they're justifying this. So
that's what we talked about earlier. That's what's going to kill you. That every time Starbucks, had their shares go down, it was always from this same shop sales growth. That's the main metric. There's other metrics, but that's one of the biggest ones you're looking at for something like this, and a coffee type shop or any kind of restaurant business. So
exactly. And this is something that I'm really interested in. This is something that I'm bullish on long term, but it's important that we share the bearish points too, and identify some of these points and why we might see them as short-term bearishness. So you've got flat to slightly negative on the same shop sales growth. Now, their adjusted EBITDA was also reduced. So it said at least 90 million. I think they had a projection of 120 million. That's what Wall Street was expecting them to say. They changed that to 90 million. So we've got slightly flat, slightly negative on same shop sales growth, and we've got a slightly adjusted EBITDA. Now, a couple of points that are still very strong on this outlook. They're still aiming to have, and they say now, at least 130 shops. So they've already raised the number of shops that they want to add this year from 120 to 130, and they're saying at least 130, with at least 110 of those as company operated. Their revenue guidance stayed the same. They're still aiming to get 700 million, which they're saying they will do by adding their new stores, which add to the revenue. The more shops they have, the more coffee they're selling, the more revenue they're bringing in. And then that same shop sales growth approximately flat. And the EBITDA is slightly lower. Now, this has been a bit of a theme of the earnings season, and we all kind of know what's hit on that, and that is the inflation problem. In the press release for the quarterly earnings, they say that this adjusted EBITDA has been brought down. Rapid escalations in dairy costs, well above historic levels, drove increase in our cost of sales. So this is what really hit hard this quarter, and this is what's going to continue to hit them until inflation gets sorted out. Now, what's really interesting is on my initial DD, I spent a lot of time looking at prices of coffee and how coffee bean prices have affected sales and competitors throughout the last 20 to 30 years. And about 15 years ago, coffee bean and coffee prices were at an all-time high, a lot higher than they are today. And on those same years, revenue and growth in companies like Starbucks and Dunkin' Donuts continued to beat. I didn't factor in the dairy costs. I didn't think that was something to look into. I missed this.
What's interesting about that, though, in the very beginning of the slide deck, we talked about how coffee isn't necessarily their main focus. So energy drinks don't have dairy. So how do we explain that, right?
Yeah, so I think you've got your hot coffee, your cold coffee, you've got your teas. You still have a lot of drinks with dairy products, and the dairy rose, I think, 29%. So that's affected quite a lot of those sales. Also, so many other factors is that they are saying that travel costs, with the price of gas going up so much, people are trying to drive around less, and that's affecting their business as well. So this inflation problem has hit, and it's hit them hard. It's hit them so that they're now guiding for flat same sales growth, and they've now adjusted their EBITDA. And if you saw as well, that EBITDA was down slightly on the earnings, even though they'd gone above their revenue targets.
That's the important thing to point out here. Obviously, if we're going into a recessionary period, like a lot of people are saying, anything that's going to be consumer driven, retail, this is going to get hit. So this is one that you put in the coffee can probably, and you look back in 5-10 years, and you're probably pretty surprised at how much it's worth. And again, I'm not a financial advisor. Maybe I'm wrong and it goes to zero, but the company, as long as they don't grow too fast especially during a recessionary period. And that's gonna cause them, management's gonna be key here, because
Yeah.
they might be able to raise prices a little bit to offset dairy, but they also can't drive the consumer away completely. And they also don't want to be
Hmm.
trying to build more stores when materials are through the roof and all those different things. That's the same kind of problem we've seen with some other retailers that are trying to expand as well. There's one
Yeah.
name I can't mention because I'm buying shares, but you know which one it is. So, if you look at that, the international expansion and even the domestic, well, with these guys, domestic, but the expansion
Yeah.
overall, just building new stores, that's going to be impacted as well. And so the market's forward looking, and they see, well, increase in dairy, the consumer is spending less. This was too expensive because it was new IPO and it probably needs to be halved anyway. Let's just sell it down after hours to, 20, $25, whatever. That's kind of what happened here. And it reported, if correct me if I'm wrong, Matt, but it reported at the worst possible time when a bunch of other companies were having misses, and it was a mess. And that anything that reported that week, if it wasn't perfect, it got smacked. So a lot of it's just kind of luck. This could have reported a month ago and it might not have had the same reaction. So
yeah, I think you're absolutely right. It reported in the same week as Unity Software, Upstart, and we all know what happened with these earnings. And Dutch Bros had a similar story, and the market's punishing companies, even like these big consumer brands. Like retail is being hit. People aren't, the consumer spend is not there, or like we saw, I think Target's earnings
Target was
this
down
week
25% yesterday.
down 25%. They beat revenue, but adjusted their EBITDA down because of supply chain
Walmart.
issues,
Yep.
because of inflation, and they're down 25%. And Walmart was down, was it 12%? I think it closed the day after earnings.
I mean, Walmart had its worst drop since like the 1980s, and like pretty much, I mean, even some of the other names were sold off with it. And I was adding some other names that should have been sold off with those. But yeah, I mean, it's you could say it's an overreaction, but you could also say, well, if we're going into a recession, these are going to even just drag lower for longer. If you look at a 2008, 2009 period, it's like we had the same thing where we thought everything was getting better, and then it just kind of drifted lower and lower. There's some people that think we'll have a snapback. Others are, doom and gloom, thinking, the S&P 500 has got to go to the 3,200 or something before it bounces, So
Yeah.
when you've got that kind of sentiment, it's going to drive anything that's consumer driven, that's new money, new IPO. It's not established. We don't have proven management track record on earnings. If I'm a money manager, I'm dumping it. And that could create opportunity for a lot of these businesses, for retail investors like us, especially these newer names, because if Targets get hit 25%, why can't Dutch Brothers get hit 25% and so on? That's a good point to make. So
yeah, 100%. And I think is what I wanted to do with this is, I think the company's got a bright future, and I think there's a lot of runway for them to keep growing. But I don't want to sit here as well and just say like, oh, this is why it's going to be like, this is why I'm holding it for the next 10 years, because everything's sunshine.
Right.
The last couple of slides have been a bit gloomy, but I think it's important for investors that it's not just there's not ever going to be a complete risk-free investment.
Yeah.
And this is part of the part of it that people have to weigh up when they're thinking, is this something I want to invest in?
It's a long-term story. Do you have this in your growth bucket? In Fired Up Wealth, if you're not familiar, if you're new to the channel, subscribe, guys, click the bell to notifications, drop a comment, drop a like. But in Fired Up Wealth, we have pillars. So we invest in usually ETFs, dividend stocks, growth stocks, spec stocks, try to have some cash in your portfolio. So the question for you, Matt, is Dutch Brothers, is that considered a growth stock? Or, we know it doesn't have a dividend. So is it growth or is it spec for you personally?
For me personally, it's growth. I've got it in my growth as part of my blueprint, is in the growth bucket.
Yeah.
With the revenue growing like it is, the stores growing as they are. As it was going to IPO, they had a PE ratio. They've now been spending through that money to get these new leases to gain their new shops. So it's something that I see as a growth, and I see it as a long-term investment. This isn't something that I'm expecting to buy into and sell out of 3 months down the line with like a 50%, 100% return. This is something that I see I've got in my portfolio now, and I think it would just be 5-10 years from now, I'll be looking at this saying there's a Dutch Bros in every city, they continue to grow.
Yep, that makes sense. No, I appreciate that. It's good. I was just curious. I figured it was probably growth, but I thought I'd ask. So it's good for the viewer to hear it.
Absolutely. So, and again, another unscripted segue, because I've got on my next slide that they're still in growth mode. So Dutch Bros is still growing. They're still on track to increase store count, and now they're upping how many stores they're expecting to have. And again, I've got another quote here from the CEO that consumer demand for our beverages remains strong. Their substantial top-line revenue growth of 54% was primarily driven by the 107 company-operated shops opened in the past 12 months, 56% increase, including 34 during the first quarter. Like, if people want to read on with this, is quite an interesting quote, but this is a people-led growth story. This is another thing that attracted me to the company, and you've seen it throughout. They are people led. They want to look after their people. They want to create this brand, this culture. Everything's suggesting to me that they're aiming to be the brand that people go to. They're aiming to be that Dutch Bros is the go-to for coffee, that they're building this culture around younger generations, that you could go there for your drinks, to enjoy yourself, to treat yourself. They're increasing revenues and they're developing new shops, and it reinforces the commitment to offering exceptional experiences and confidence in long-term strategy and growth targets.
So I got something interesting for you. Sorry to interrupt you. This is really interesting.
No, go ahead.
So we talked about price to sales earlier, and I think it was a little over 2 for Bros, right? Yep. Now, Starbucks has a P ratio, and it's not a bad P ratio, but you also can look at a price to sales just to compare it. There's as of May 17th, 2022, according to YCharts, it's 2.768. So that's interesting, because sometimes algorithms do crazy things like, well, we'll just discount it by X amount of percent from its main competitor, you know? But then you look at it and say, well, this one has a dividend, but it's not growing as much. This one is growing, but it doesn't have the P ratio. It doesn't have the dividend.
Yeah.
And so they're very different investments. And this type of environment, you don't really want the Bros, you want the Starbucks. And that's what everybody's saying, buy dividend stocks because of inflation. So, and again, that could create opportunity for us longer term, because if this doesn't come public if the timing of this is different, you might not ever see that price. If they come public 2 years from now, you know what I'm saying? Like it might be an opportunity where maybe it gets back to even a 2.7, which is the same as a Starbucks. You're getting a pretty nice discount at where it's trading at now. So who knows?
Yeah. And you look at Starbucks, you think, do you want that dividend company? You could argue that this is like, if you had that opportunity to buy into Starbucks however many years ago, this is when a company you can get in your growth bucket, and it matures into that DGIF, and then matures into, eventually you could argue, maybe becomes a value stock, or just one of your sleep well at night stocks that you've just got there, you never have to worry about. To say that, I feel, is a more speculative, like, I can't say that. I don't know what this will be in 10 years time. I don't have a crystal ball, but at this point, I feel very confident in how they're growing, how they're developing, what they're doing. And I feel like it's got a really bright future. So perhaps 10 years from now, you're looking at this in your portfolio and it has a dividend and it's doing share buybacks. And on that next economic downturn in however many years it will be, you're looking at something like this, like, oh, that's keeping my portfolio stable.
Yeah. So for comparison, $4.4 billion market cap for Dutch Brothers. So 4.4 billion. Starbucks market cap is going to be $82.5 billion. It has a P ratio of 19.26, which is attractive. Yep. And the dividend is 2.72%. So most value investors are going to say, which one are they going to pick? Right. But to your point, it definitely could be one of those where you get into it early and you hold it for a long time. It could grow into something like that. And most restaurant type stocks will pay a dividend once they get to growth saturation. Even as they're growing, like Domino's and a lot of those that we talk about, were DGIF type stocks that were growing, but paying a little bit of dividend along the way. So I do think at some point these guys, I don't know when, right? But to your point, I think that they will pay a dividend down the road and kind of grow into that DGIF. if you can find stocks like that in a portfolio, they're almost impossible. Like Microsoft, I bought it in 2012.
Hmm.
And I really bought it for Azure growth, but it's really
Yep.
become now this dividend powerhouse. My yield on cost is like 6-7%. So there's no
Wow.
reason I'd ever sell it unless the company does something crazy, the story changes. But that's, if you can get into those early, especially if you're a young investor and you go
Hmm.
to a place like Dutch, you're one of the consumers, one of the customers, that's maybe a generational opportunity within the restaurant industry to invest in something that you enjoy, that you believe in, and you can grow with the company over time. Not to sound corny, but it's true what you're saying. I
Yeah.
think makes a lot of sense.
And something that I've learned from you sharing in the Discord recently, you pointed out about some of these, what would be considered maybe value consumer staple companies, that their PE ratios have gone through the roof. And you're
Mhm.
saying Starbucks, there's a fairly decent PE ratio of like 19. You wouldn't really knock that. But if people are jumping in now on those companies that they see as being safer during these times, when that smart money starts moving around again,
Yeah,
this is where retail investors can then, I think, they chase what's in fashion or what they think
totally.
is right for the market. Well, the retail investors are at a disadvantage to the big institutions that would have transitioned their money into that 2-3 months ago.
Yeah, because Clorox and Costco are both at their peak, like 40 PE ratios. So,
Yeah.
and Google is like
Coca-Cola's the
was a
same.
20. Yeah,
Like
yeah,
we talked about Coca-Cola earlier, and it's something I've had Coca-Cola. It was one of the first things I purchased. But I'm looking at it and I'm like, how is this going up every single day whilst everything else is dropping and everything's deep in the red, and then Coca-Cola is just slowly going up and slowly, and you're like, this is
safety
this
stock.
is
Yeah,
interesting. Exactly, yeah, but it's not going to stay with everyone moving their money into that, because as soon as people start to feel confident in growth again, it will start transitioning back over, and this is where people could get burnt. So maybe Starbucks will be safe and could avoid that, or maybe not. Who knows?
we could have a whole video on Coke, but Coca-Cola, we won't go into that right now. So that's
Sure,
another
that's
one
the
I did used to own that one as well. The problem is though, I look at your generation, look at younger generations, like they don't drink soda. So, I mean, they've got an uphill battle there. I mean, they're
yeah,
not going to go out of business or anything, but it's not a hyper, you don't buy it for growth. I get it. But I look at the long-term prospects and I'm like, I don't know. I mean, maybe people keep drinking Coke Zero forever, but it seems
yeah,
like more and more younger people want that health conscious stuff that, they're going to have to diversify a lot more into, and they've done that, but they're going to need to do even more of that. And so, same with Pepsi, with the organic and health brands and stuff.
yeah.
They've got those, potato chips and all that, but they need to go on healthier brands, and they're starting to do it. But I think they're behind the eight ball a little bit on some of that. So
Yeah, Coca-Cola's got an interesting future, I think, and they keep just buying. They recently acquired Body Armor for that post-gym drink to compete
Mhm.
with Gatorade and Powerade and the likes. I'd never heard of Body Armor, if I'm honest, until that acquisition, but they just eat up competition, and I think that's the way that Coca-Cola's been surviving, and
Yeah.
how it will just continue to survive. It will just keep buying out. I think they bought Rockstar Energy drinks to compete with Monster, and there's so.
Um,
Is
yeah, Rockstar
that
would have
right?
been Pepsi. Um,
Oh,
yeah, I think. But anyway,
yeah. But
I'll
the
double
amount of
I'll double check.
drinks in the fridge when you go to the drugstore and you look in the fridge, and the amount with the Coca-Cola label on the back, or the Pepsi, they pretty much own everything in there.
Yeah, it was Pepsi acquired Rockstar Energy drink for $3.85 billion March 11th, 2020.
Wow. Oh, that
Actually,
wasn't that
because I
long
bought
ago.
it around that time, it was the pandemic. Actually, I bought it when it was really cheap, and I ended up making a lot of money on it. I wrote it
Wow.
back up in I think I had it in my Roth, and then I sold it, and I converted into AbbVie, and then I recently now converted AbbVie and sold that, and I bought ARC towards the bottom with that. So it's like, you try to. I'm an investor and I'll hold stuff, but like on those staples, even now I'm trimming, some of those income stocks. I can't even name them because I'm actively selling them, but I'm trimming some of those income stocks. If you were on the platinum call, you heard, which ones I was trimming,
Yep.
and I'm buying, the hyper growth stuff that I really believe in over the next 5-10 years. So there's
Yeah.
nothing wrong with that. I mean, it's not like I'm just day trading or anything. Sometimes when the market does crazy things, you have to rotate your funds into most conviction. And if you don't have unlimited cash, sometimes you're forced to do decisions, which is part of the reason the market goes lower and lower. People are forced to liquidate for that very reason, especially if you're a money manager. You're liquidating, you're just hitting the sell button, you're selling everything good and bad.
Yeah.
And that's what happens. And as an investor, an individual retail investor, that's where you can pick up the scraps. You find the diamonds in the rough that are thrown out with the bathwater, and those are the ones that you pick up. And that's why we're having this conversation today, because this could be one of those. So
Yeah, well, this is what I'm hoping. So, and I got in a little bit early on this, but at these prices, it seems great for what they're aiming to do. And this is my final slide, and I thought I'd just use this to summarize the things we've talked about. The strengths here for Dutch Bros that I see is that the revenue is still growing. That top line of their balance sheets is still strong, and it's still looking to maintain that strength with their new stores openings. New shops are still on track. They're still aiming to get those new shops across the year, and they're increasing that number. As I said, they'd originally aimed for 122, now 130. They're saying at least 130. Their use of tech, the way they're employing people to focus on this and use those apps to build customer loyalty, I think will pay off for them. Strong workforce. They've got that labor, they've got strong labor there within their workforce. They're working well, they're happy. And the culture is, if you read through some of their transcripts and their annual reports, the word culture comes up so much. They are putting people first because they want to build this culture, this Dutch Bros culture. It's ingrained within the company. And it sounds a bit corny, but they don't call them baristas, they call them broistas. It sounds corny, but it's fun. And I think we've all worked in workplaces that are fun and some that are boring. And it's just little things like that that clearly make the difference, because people want to work for them. And when people do, they stay working for them. And that culture is being built. And I think that will help them out in the long term. Then just to highlight some of the risks we've talked about, because you've always got to go over the risks. The macroeconomics is going to be a big factor now if we go into a recession, or if inflation keeps going up like it is with gas prices and dairy and well, just about everything. It is going to hit their balance sheets. And I put here as a risk needs an Eastern Coast development. They need to figure out a way, I feel, if they really want to be that grow into that company. If this is the investment that people want it to be, where you get in now and eventually it's like Starbucks and you 10, 20 times your money and it becomes dividend stock and it continues to grow, I think it's going to be a risk for them getting into the East Coast, because it will be different opening stores in New York and Boston than what it has been opening up in Oregon and Southern California, where things are spread out and everyone's driving everywhere more. So I do think they really need to handle that properly in how they come into the East Coast cities, the walking cities, and what they do about that.
Yeah, that's really good points there. I agree completely on that. A big thing, like we mentioned, just being in the retail, consumer driven. I've got kind of random stat here, but I think it's interesting. You might find it interesting. You might not have seen this. So the CEO, Travis Boersma, how old do you think he is? I guess. Trivia.
Well, he's been doing Dutch Bros for 30 years. So I got to say 55.
It's 51. Now, stop sharing your screen for once. We'll go to the others so people can see both of us.
Yep.
So listen to this. He actually co-founded it with his brother. And his brother, Dane, actually passed away at age 55 in 2009. So there you go.
Yeah. And I also know that I think there's like a Dane, I don't know if it's named after him, but there's a foundation in his honor where they do a lot of charity work. And on the Dutch Bros website, there's part of that is their like they've got a section called Our Impact, and it's all about their work in, they do these like charity drives, and they just try and do good, I think. And they show that off with Dane's name attached to that, I believe.
Yeah, no, that makes sense. So this is a pretty high conviction stock for you, I assume. Is it one of your top five, or what would you put it in for your conviction bucket?
I think it's one of my top five
Top five.
for conviction. Oh yeah, yeah. And I've just, it's just one of those things. The deeper and deeper I got into it, the more I looked through the balance sheet, the more attractive it seemed to be. That everything I've just tried to, you've seen them in the Discord, the amount I've posted about this. So I've really read through. I tried to condense everything
That's
in
why
as
we're
much
here.
as possible.
Yeah.
So yeah, so I've tried to because when people are watching this, they don't necessarily want like all this just like detail and detail and detail, which is why I just tried to hit like the headlines of why to me this is a strong long-term investment. And there are risks to that, which I've tried to make as clear as possible to give it as full a picture and as well-rounded as possible. But there's plenty here to like really be impressed with.
Yeah, absolutely. So to wrap it up, a couple quick questions for you. So before I do that, one thing I wanted to ask you is about the balance sheet. So I don't expect you to have this memorized, but do you know what the cash and cash equivalents might be just offhand? Just, are they sitting on a lot of cash? Are they going to burn through that? They're about $4.4 billion market cap. So what kind of cash do you think they have sitting on there from your last research?
So from my last bit of research, unrestricted cash and cash equivalents balance of 26.8 million.
Okay. So that's not terrible.
No.
Did a Google search earlier and it was a lot different number than that. So that seems more reasonable. But yeah. All right. So for fun, I want to thank you for doing this, but for fun, don't leave yet. Much. This might be the best part of the whole video. So don't leave yet. Watch this next part. So
now I'm nervous.
You just started investing in 2020. I've been investing almost 25 years and I've been through a lot of these situations.
Yep.
There's a lot of new investors that watch the channel. The interesting thing about Fired Up Wealth is we have young investors, old investors, new investors, seasoned investors, everywhere from people with multi-million-dollar portfolios, like way more than what I have, and people with, $500 Robinhood accounts. Yep. And that's what's really cool about the community is we all learn from each other. We've got, I think, 40 countries from all over. You're originally from the UK, living in New York, but we've got people from all over the place. So what are like a couple of things maybe that you learned either from investing or maybe from the community since you started your journey in 2020?
The number one thing is that psychology plays such a big part. Psychology is huge in that you can look at something, start going green, and there's that urge to vote, like the fear of missing out, like, oh, I need to quickly buy it and chase it as it's going up. The psychology of it is such a huge part. I think that's one of the most interesting things I found about this. I think Peter Lynch said the most important organ in investing is the stomach. Like you need to just be able to stomach it.
And you get the FOMO now too, and greed works both ways. So the bears get greedy on the other end, but you get the FOMO now as we're mostly long, we're bullish, like we're buying for long-term holds. So we're not really thinking about like shorting the market and stuff like that. We're not trading really, but you have that FOMO, like, is this the bottom on this stock? Should I be loading up on Dutch Brothers right now? Or, you know what I mean? Is it going to go back to, the lows that we had, pre-market or whatever after the earnings call? And you just don't know. And we always say you just have to dollar cost average, do your best, no dwelling on past decisions. But you're right. The brain, right now it's the woulda, coulda, shoulda. Why didn't I sell everything in November and buy it back? And why didn't I do this? And I should have done this and I should have hedged that. And it's like, well, psychology will get you. And at the end of the day, I've run some simulations. I said this last night. I'm confident I'll have more money in my target date at 2030 because of this. It's just painful to experience it along the way. I mean, you get a pullback of 30% in the NASDAQ. It's not going to be fun for anybody that's investing in growth, so.
You almost have to learn to take what your brain's telling you to do the opposite.
Yeah.
Like when you see it going up, that's when you start telling yourself like, oh, I should buy because I'm going to miss
Oh,
out on it.
yeah.
And really that's when you like, no, I need my patience. I need to just wait and see what happens. So
Or trim
there's
some. Yeah.
yeah. And there's two things I've learned. And one of them is definitely that. And the other one is do your homework. You've really got to know what you're investing in. Anything with low conviction when you or you won't have high conviction if you don't understand it. And the more you can read up on something, the more you can understand what's going on. And this is why I tried here just to have some snapshots from the balance sheet, because
Yeah.
I feel like it's important to really like kind of dig down and dig into something to really understand it as best as you can. And sometimes it could be boring and sometimes it's quite dry looking through just balance sheets and numbers, and but you need to know what what you're investing in. And to quote Peter Lynch again, I think he would say is that people will spend 6 months researching a fridge or a microwave to buy, but they'll put thousands of dollars into a stock that the dentist has recommended to them.
Yeah.
And then when things go wrong, you're like,
Yeah.
like what happened?
15
But
investing rules are, they're really important. It's like the investing Bible, those top 15 investing rules. And you've gone through the master class, right?
yeah,
Was that helpful for you?
oh yeah, completely. I mean, I wouldn't have been able to do any of this without it. And Dutch Bros was something I found after putting the masterclass skills into practice.
Yeah.
So what I was doing was I watched those videos, and it was actually the ones that I've watched the most and like gone back over to review are the like balance sheets ones and the accounting side of it, because something that I don't have any prior background in at all. I think again the psychology lesson was probably the most valuable, in that it's like just become like the fundamental for me of like
Yeah.
you have to be able to just like switch off in your brain. You have to stop like thinking it with emotion. You have to be able to stomach it. And then it leads into that second part as well. Once you like, I've got companies in my portfolio that have done terribly in the earnings season, but because I understand them, I'm not worried. And I
Yeah.
think like this is just a bit of a blip, and
Right.
it might take a bit of time to climb back to where it was, but I'm not going to try and fix it with by throwing more money and trying to lower the cost basis. I'm just going to like, I've
Yeah.
got confidence that if I just let it sit, there's going to be some time in not the like distant future where I'm going to be looking at that and go
Yeah.
like, wow.
It's like I talk about in Discord a lot with, if you own a business, because when you own stock, you own a part of a business. That's what you
Yeah.
own. You own a piece of a business. And if you own a business that's not a stock certificate or whatever, I mean, you're going to have fluctuation in your business, but you're not going to go sell your, plumbing business just because it's, the market's down a little bit, and you don't have a ticker floating around on the top of your house telling you that your house
Yeah.
went down 10 grand a day. It's just, it goes back to psychology again.
Mm-hmm.
And so anybody that's watching this, if you're curious what the masterclass is, so if you join the platinum tier, if you go to patreon.com/fired up wealth, you join the platinum tier, that gives you the masterclass. It's 12 videos, 11 and a half hours from A to Z, everything I learned in 20 years. Basically, if I was going to teach myself 20 years ago, like, here's what you need to know to be successful in the stock market, that's what I tried to create. It took me about 300 hours to create this. Matt is a teacher by trade, so
Yep.
I'm not, but if a teacher says that he learned from it, I feel, humbled by that. And that makes me feel very good. And I try not to be too salesy on this, like pumping people, like having to push them to that. But there was a lot of time that went in that, and it's part of the exclusive community. And we're doing things like last night, we did a 2.5 hour, 2 hour and 20-minute platinum call with, 20 of us talking about stocks. And we're trying to make we feel it's the best investing community on the planet. And if it's not, we definitely will be there sooner than later. So definitely join us. We've got, different tiers depending on your budget, but the platinum is going to give you that full masterclass plus tons of other stuff. We do live streams on Mondays. We do live streams on Fridays. We do chart days, which are live streams on Wednesdays. I mean, anything else you want to tell the community? I don't want to make it a sales pitch, but it's more important hearing it from you guys than from me. So if you were to tell somebody that's kind of on the fence, like, is it worth it to at least check it out for a month, or what are your thoughts, Matt?
Yeah, I mean, like me just being here is that testament to it. I mean, I could, rather than say that, I feel like I can show it. Like I couldn't have done any of this stuff just a few months ago. The lessons that you learn and pick up on the masterclass, the Discord, it, it gives you the skills, I find. So I'm now using those skills to make my own investment theses, to share these ideas and to do it with confidence. And there's an open community to discuss this, rather than just say like, here's what I think, and it's just out in the abyss. But rather, there's interesting discussions that come out of it. I think there's so many different parts of it as well. Like I could just kind of jump around now between like the masterclass and the calls and the Discord. There's so much to just soak up and absorb, and it's there if you want it. And if you want it, it just leads to opportunity and understanding and knowledge, and it gives you a calmness as well. I think it's so, when things are based around money and the stock market, it's like a roller coaster, and it could be terrifying if you don't know what you're doing. And that's not me saying that I do know what I'm doing, but I feel like I'm learning to get there. And that masterclass is what's mainly, has gotten me to where I am and given me the confidence to feel like I'm getting to the place I want to be.
That's great to hear. I appreciate that. I mean, it's birds of a feather fly together, and we're helping each other. Like I said, there's people that are way more experienced even than I am. And I've been in the market almost 25 years. And, it's a community of like-minded people trying to strive for financial freedom, not necessarily like lean fire, like, retire at 30 and live in an RV. Nothing wrong with that if that's your thing, but more like, investing and trying to get to a place in our life a little earlier than 65, where we can enjoy traveling and our family and having financial freedom. And we do that by trying to grow and outperform the market, and then converting that into dividends and passive income. And that's like the foundation of what it's about. But really, it's like Matt's saying, trying to teach you how to fish. We don't want to be a fish provider and just give fish out. It's not a stock picking service. And that's why Motley Fool is a really good partner for Fired Up Wealth, because we complement each other so well too. And we try to help those investors that really want to take another level. It's not for everybody. It's a niche thing, because not everybody wants to be an investor or has the interest, but the ones that do, you're not going to find anything better. So give us a try. And I guess that's enough for the pitch, but I think it's important to talk about it, because so many people ask me like what it's about. And I think hearing somebody else that's, a member of the community that joined a year ago or whatever, it means more hearing it from you, and you're just giving your honest, feedback. And if you join and it's not for you, you can always leave. That's the thing. It's month to month. It's not like there's a obligation or strings attached or anything like that. It's just, So.
And that's the thing as well. I think that I would, the way I just answered your question there comes from, it's genuine. It's my experience, is what the positives that I've gained from this. So even though I kind of like rambled on a little bit, I think that just shows that there's, it's coming from a place of something that I've genuinely benefited from and taken value in and gained from. So that experience is really good for me.
Yeah, I appreciate your time today and all that feedback for the community, and love to maybe have you back soon. We'll have to find there's a few stocks I have in mind that we might do a good job. I think we made a good tag team today. So
I really enjoyed this.
What's that?
I said, I really enjoyed doing this. So we'll have to try and find another,
it's
our
fun.
next high conviction to dig into together.
And eventually I want to get to the point where we get maybe 3 or 4 people from the community. So like, that's the thing about this community. It's not just like about Eric telling you that he knows everything. He's like the master of everything. It's like, I'm trying to teach you what I learned over, 25 years. and not just from investing. I've been in real estate. I own restaurants, part owners of restaurants, and I've done a lot of things, and I've made a lot of mistakes too. And I try to show people it's like, I feel like it's my calling. I used to be
Yep.
in software, 150K base salary plus commission, and I walked away from that to do this, and I love it. I wouldn't be doing this with Matt at 10:15 at night, and he wouldn't be doing it either if we didn't enjoy
Yep.
doing it. So
Absolutely. And you know what I'll say as well, I'll finish up because we talked about this, I think, when we had a call a couple of weeks ago. And that is that I said that there are people out there that want to be in the markets because there's value to doing it. But it seems like a scary place. And it's things like this that help you to understand that it's not, that there might be like terms or words or stuff that you hear on the news that sounds like it's like a big like number crunching financial machine. And there are elements of that there, but when you start unpicking it and understanding it, it's not what it first seems.
yeah,
So, and the community is something that can help bring you into this and get that understanding of like, this is how it works, this is how it can benefit. It doesn't just benefit Wall Street, it can benefit everybody, and you can jump in and get a piece of it too. You can learn the skills to understand this too.
absolutely. Long-term investing is the only way you're really going to beat Wall Street.
Yeah.
And that due diligence and research to find the quality companies and to make sure you've done all you can. You're not gonna be right every time, but we just spent a lot of time on Dutch Brothers, and you've spent hours and hours and hours, and you have conviction at night if it goes down 50% from when you bought it at, that hey, I'm in this for the long haul, and it's gonna be worth a lot more money because I know what this company can do, and I have conviction and confidence in the management and the thesis and the growth story and all these different things. Just like a business owner would do. Businesses are going to have ups and downs. The market's going to have ups and downs. Unless you think that we're going to go into a zombie apocalypse and the US economy is not going to recover from this, and the thing is, if it doesn't recover, you're not going to need your money anyway, because it won't be worth anything. So, it's easy to get that fear, that doom and gloom, but when you really step back, it's kind of idiotic how people just panic and like wait for a bottom and, just buy quality, buy at levels, relax, have conviction, sleep well at night, know that your future is bright. And if you can do that, it makes investing a lot simpler, and that's what I think the community helps you do it. And it helps enable that mindset. When the world's falling, you can go into Discord, and the world's not falling in Discord. We're not going to let it, come to that in Discord.
Oh yeah. We've had those massive red days, and everyone's just, seeing opportunity.
Yeah. And we all share what we're buying. So if Matt's buying more bros, he tells you in the investing trade floor, I bought more at this price. And we've got, hundreds of people, and they're all sharing their knowledge, their research, their due diligence, their buys, their watch lists. I mean, it doesn't get any better. I mean, I wanted to create something that didn't exist because I had spent so much money on every other service out there. And I feel like we've done a good job, and it wasn't easy. I've put a lot of blood, sweat, and tears to get it there, but I think we're on the right track, and we'll keep improving and doing stuff like this. And I think this kind of stuff's cool because we're just taking people that found us through YouTube, like, hey, you're part of the community now, you're part of the team, and let's work together. And this is exactly what we do. And now we're doing it on YouTube for the whole world to watch, for free. And you get this information, and hopefully you learn from it and benefit from it. So, and if you did, hit the like button, drop a comment, subscribe, click the bell to get notifications. That's the part I don't like about the YouTube. I always got to remind people, unfortunately. So anything to close up with Matt, this has been great. And I really appreciate your time. I want to be respectful. I know we've gone over. Anything to close it out on?
Oh, yeah. So I think Dutch Bros, I'm long-term bullish. I like its prospects. I like its growth. Not financial advice. Do your own research. There are definitely risks. I like it for the long term. If you're new to investing, bear in mind psychology is the number one thing, followed closely by doing your own homework and research. The community is great. I look forward to the next time I'm on a YouTube video with you.
Well, thanks again. I appreciate it from the bottom of my heart. I'm sure the whole community does. And if you do appreciate it, drop Matt a comment below and thank him for his time. So, Matt, I hope you have a great evening. Thanks again.
Thank you very much.
Take care. Have a good night. See you guys
Thank you.
later.